The Apartment Gurus podcast is brought to you by Greenlight Equity Group, an apartment acquisitions and holdings firm co-founded by Carl York and Tate Siemer, host of this show. We offer you the opportunity to be an owner of cash-flowing, wealth-growing apartments without the headaches of being a landlord. These assets are recession-resistant, risk-mitigated, offer significant tax advantages, and are a great alternative to the stock market. Ready to check it out? Go to www.investwithgreenlight.com today to book a personal consultation with Carl or Tate. Again, that's investwithgreenlight.com. We look forward to meeting you. Welcome to The Apartment Gurus, where twice a week, host Tate Siemer brings you deep dive interviews with the wisest gurus in the apartment investing industry. These experts are sure to create game-changing value and inspiration designed to catapult your business to the next level. Be sure to reach out to Tate at www.investwithgreenlight.com for access to his investor portal and Calendly link. And now, here is Tate Siemer and the Apartment Gurus.
Welcome, everybody, back to another episode of the Apartment Gurus podcast. This is going to be a fun, electric episode. I promise you, the guest today, you guys are going to love. Corneilous Cannon is a friend of mine. I've known Corneilous for at least a couple years, maybe 3 years now, I guess. And from the multifamily space, just the kind of the family and community that we're all part of. And Corneilous at the time was doing an incredible platform that featured people's deals and gave people the chance to interact and ask questions and get to know each other and network. And he's kind of a master connector, if you will. And he was dealing with and sees the need for all of us dealing with the big elephant in the room right now, which is, capital raising is hard. And I'll just say it, like for the record, you're on the air, like it's hard right now. It's really, really changed a lot over the last year, at least year and a half. And the retail investor has a much different mentality in general these days, we've found. And so, we're all looking for different creative ways of putting the capital stack together, right? So we can get a deal to the finish line, get it closed, and get the asset under your management and implement your business plan and go from there. So Corneilous is always up to amazing stuff. And I think I'm super excited for you guys to hear about what he's up to right now in this space. So, but first, just Corneilous, welcome to the show, man. Super, super glad you're here.
Man, thank you for having me. I'm so excited to be here. It's been like a long time coming. I've been waiting on the sideline, waiting to come. Put me in, coach. Put me in the game, coach. Put me in the game, coach. Oh, man.
Yeah. You're right. I don't know why this hasn't happened before now, but you and I have kind of reconnected here recently over a couple of different deals that our team has been working on, and through a mutual friend and mastermind member of my mastermind, the Multifamily Octane, Scott Kidd. We'll mention Scott, Captain Scott Kidd. And so, it's great to be back in each other's circle here. And you and I had an awesome call the other day, just talking about really like what you're building or have built and what you're doing in this space. But since this is your first time on the show,
yes.
I think I'd love to hear from your perspective, like some of your backstory, Corneilous, in terms of, especially in terms of your entrepreneurial journey and your journey into real estate, into multifamily, and then kind of to where you got today.
Mm-hmm. Well, thank you for sharing. I think it's funny because of a few years ago, I was kind of in this spot that many people would be in. I was like, I woke up one morning and looked in the mirror and kind of thought to myself, like, man, I really thought I'd be further along in life than what I am right now. Like what, like what's going on? Like I thought that I was doing the right stuff, and I really didn't know where to go. Right at the time, I didn't like my job. My marriage wasn't going the way I was going, and I feel like I wasn't really there for my kids. And I feel like what am I doing wrong? I thought I was doing all the right stuff. And I say I went to my 2 G's, right? I went to God. And God kind of sent me to Google. I kind of start Googling like how to get, start searching like how to get this lifestyle that everybody dream about, like the one you see on TV and all that other stuff. Now I was doing at the time some real estate, wholesaling houses and so forth. But like this, well, how do you get this passive income or the financial freedom everybody talks about? And that kind of led us to like a 3-day workshop. Me and my wife went to a 3-day workshop, and I remember standing there, looking at the guy going through all like this. Now, I want to go to another workshop again. Okay, just go to it, so forth, and see what happens, right? Mm-hmm. And I remember going through the workshop. First day it was kind of cool. Second day was kind of a little better. Then third day it was about multifamily investing. Mm-hmm. Right. And I knew the third day was the big pitch. Like, okay, you kind of talk about first you see how it works. The guy testimony said, okay, now he can do it. And I knew he was about to do his big pitch about for the final price. And I was like, okay, Lord, give me a sign that say, what should I do? And he said, you can have all this for this price right here. And I looked at that price, and I said, thank you for my sign, God, because that price is not for me. And I started laughing, and I looked up at my wife, and she was just crying, like, because of she knew that we needed change in our life, like, because we missed so many, sacrificed so much about the family time, the date nights, just always grinding, trying to make it happen. Like, when was our moment? And at the time, I was like, okay, gotcha. Let me see what I can do. Try to man up. Let me see what I can do. Right. Let me see what I can do. So I went to the back, talked to the guy, and he said, well, Corneilous, well, we don't have the gold package, but we do have like the silver package, like some small package. And he said for this price here. And I said, okay, cool. Let me see what I can do. And I think I did a couple of wholesale deals, and I kind of a payment plan the money. Mm-hmm. And he said, okay, gotcha. Then I remember like he came, like he went on the table and got up and gave me a box of books. I'm like, this books, like this dude, this is like I haven't done books like for long. Like he gave me a box of books. There you go, man. That's your package. Mm-hmm. And I said, okay, man. So I went home and I kind of studied the program like from front to back, because I had to make something happen, because I just paid this large amount of money for these books. Mm-hmm. And it seemed very simple. It seemed really very simple. It seemed that find a good deal, underwrite the property, and go out and raise capital. Right. Mm-hmm. So I said, that's fine, no problem at all. So next few weeks, I was meeting brokers and sellers, trying to find a property.
When was this? What year was this?
It was like 2018. 2019. Yep. Around time. It seemed very simple, right? So it was 3 steps to find a property, underwrite it, and raise capital. Great. So got my game plan. Let's go. So I spent weeks, even months, trying to find the right property, right? Then I spent hours with spreadsheets, software, trying to make the numbers work. Then I go to meetup groups and try to meet people, trying to raise capital. And in that process, what happened was I actually got a deal on a contract. And I was excited because I got a deal on a contract. So now it's time to go out and try to raise capital. So I went out and tried to meet people and so forth. And what happened is I didn't get the money in time. And I had to cancel the contract. And I felt like I canceled the contract. The broker stopped calling me. I felt like a true failure. Like what happened now? Like I did everything all right, but it didn't work. I was a very down spot. And I think I started trying to numb my pain, started like, just trying to numb something, look at something funny and so forth, social media. Mm-hmm. And funny because I came across this post, and this post said something like, I came to the country a couple of years ago, barely speaking English, and now we're closing on 3,000 units. I'm like who is this guy, right? Like, what is he doing? So I click his profile. He's like, he'll close a new deal like every other week. Like, dude, he just like this. Like, what's the guy doing? I don't know. So I clicked his profile, talked, kind of linked by schedule a phone call with him. So I called him, so forth, right? And got a phone call. I'm excited because I'm about to get all the secrets that he got and so forth. The first thing he asked me was, he said, so Corneilous, what do you do? I'm like, what I do, man? Listen here, man. Mm-hmm. I got, I'm real estate agent. I'm good at finding properties. I got this software to underwrite very fastly. And also I have some property in the pipeline that I'm about to raise capital on. And he said, like he wasn't impressed. I'm like this, man. So man, what do you do? He said, Corneilous, you understand is real estate is a team sport. Find something you enjoy, become good at that, and you partner with those who are good at what they do. Mm-hmm. And when he said that, like one of them old Batman slaps, one of them like I knew it, but I wasn't doing it. And at that moment, I said, gotcha. I'm about to focus on one thing, become good at that, and partner with other people who are good at what they do. Yeah. And one of the things that I struggled with at the time was raising capital. So I said, well, listen, let me figure out how to raise capital. And so I started digging down about sales, marketing, and so forth. And I realized that in this process of game, there's three different hats we always propose to wear in the business, right? Mm-hmm. You have the CEO hat. Everybody want to be a CEO and so forth about being a CEO. But however, a CEO is really made to do what? Basically, to run a business, and the business really just creates systems, right? Mm-hmm. That's why one of the biggest companies like McDonald's can run $1 company because of why the systems that's involved. The CEOs really just make systems, right? Then the other hat is the entrepreneur. We all entrepreneurs and so forth. We all trying to solve problems, so forth. And however, the entrepreneur is not really meant to make money. It's only meant to solve problems. Find a solution for a certain problem. So and as we do it, well, the family find a solution for a certain problem. But the third part the hat need to wear is the marketer hat. We need to become a marketer. How to find a solution and put it into the right people. And I kind of dive into the whole marketing side, and I realized that was my situation. About I wasn't being a great marketer at the time. At the time, I wasn't marketing at all. I felt like the whole thing that if you find a good deal, the money will follow. Well, it didn't follow. Mm-hmm. And so in that process, I started learning more about my marketing and so forth, and really trying to build service to market. And that's how the platform kind of came up, learning stuff. And now we kind of created it kind of grew that platform from different avenues, right? Because of so many times we kind of, once again, as entrepreneurs trying to solve more problems come up more solutions. And now we kind of got what we're talking about today about the whole crowdfunding platform that we started because I realized that I believe, this is my thought, I believe that we all jump in these real estate events and programs, so forth. I believe like we do it, trying to be GP, trying to be lead and so forth. But I think that ultimately, we really just want to be passive investors. We really want to sit back, put $1 in, and get $2 back out, right? I think we all want to do that. However, the downfall is many of the deals out there, you have to be a credit investor, or you have to put $50,000, $100,000 down, right? Mm-hmm. Nothing wrong with that. However, 90% of America are non-accredited investors. Right. So many times your deal is not going to non-accredited investors, right? I mean, going to people. And then the $50,000 or $100,000, it comes out, somebody may have that maybe once every 3 years. Right. So it's like you got to sit on the sideline the whole time. But I think that and also, how much do you trust somebody to give them $50,000? I think that, and at one time, if you're making like half of your income, if you're making less than that, so forth. Yeah. So I think the whole crowdfunding route now is growing because of it allows investors to play the game of investing, but invest in smaller increments, but still play the game of investing and be passive investors by receiving money on a passive level. So that's my belief.
Yeah. Wow, man, that was such a. Starting with God and Google all the way to crowdfunding, like that was quite a ride you just took us on, Corneilous.
Thank you.
But yeah, no, great stuff. And what an amazing story too, as far as the you and your wife having that moment in that event, and you stepping up and figuring out what you needed to do or what you needed to make happen to make your dreams come true, right? Like to level up. Like you didn't take no for an answer, and you figured it out, and you got a bunch of books. But I'm sure you got hopefully you got a lot of other great value out of that, but I love the way too that you kind of simplified and contextualize the industry into finding deals and finding dollars, and then of course I actually can't remember what your third was. I always think of the managing the deals, like the ownership part is like a third piece, right? Asset management essentially. And you also you mentioned marketing, which is just a great place to take the conversation at some point as well. But just some like great takeaways in the sense of figuring out what your lane's going to be, right? Like, and I think those of us that kind of come from that solopreneur model where, and I know you did or do, and certainly I certainly did I had a partner the whole way, but we were definitely solopreneurs as a partnership for a long time. And you get into a place and into a mentality where you just do everything. It's just a given, like an assumption that you're doing everything. And guess what? In this space, when you're putting multi-million-dollar commercial real estate deals together, you can't do every part of that well, right? Like as talented as you may be, you can't do it well on your own. Now you could have a great team and be vertical in a lot of different ways and that sort of thing. That's different. But as far as what the path you chose, Corneilous, and taking taking the capital raising aspect by the horns, so to speak, and then taking on a really big problem, which is actually a number of big problems. Yes. One is just on the sponsor side, the need for capital to get these deals done, right? And the need for creative ways of reaching as much capital as possible. And so, there's those of you that are familiar with the 506B structure and 506C structure, there's kind of limitations to both. And we'll get into the crowdfunding structure and kind of how it really, in a lot of ways, gets around a lot of those kind of limitations, at least in my eyes, and really opens things up for so many people. So solving big problems, Corneilous, that's what an entrepreneur does, and so kudos to you. I've kind of known for at least a couple months through our mutual buddy that you've been putting this together, and super exciting. So like really good stuff, great takeaways there. So talk about crowdfunding and how it works, and specifically how your setup's working, or how it works, and maybe a few things that make you different from what else is out there.
Yes, and I think that one thing you said about the struggle about raising capital, right?
Oh yeah.
I think raising capital. Let's kind of dive there for a minute. I think a lot of people struggle to raise capital. I think new at it. One, I think that. Two, I think that you need to have the conviction in your heart that your deal is better than somebody else. To understand, like I'm not raising capital, but I'm doing you a service because of your money's going somewhere. You need to invest in my deal because of my deal is the best option for you. And a lot of people don't. I think a lot of people don't have the conviction in their heart to have that conviction. Like, hey, stop putting your money over there. Stop putting your money in stocks. Stop putting your money in crypto. Invest right here because it's safer. It's less riskier, and it's better for you. I think that if you had a conviction friends drink and drive, right? How much conviction would you have to say, dude, if I need to stop you, I love you, I'm doing it because I love you, right? And have that fortitude, have that conviction side to stop that. And right. I think a lot of times, I think it's one thing. I think a lot of times, so it's kind of a caveat to the crowdfunding, because I think a lot of people be afraid to raise capital because they be afraid to front the question of, if it's so good, why aren't you doing it? Or how much money you put into it? Or how many deals have you done? And many times, think about it, if 90% of America is not a credit investor, chances are they probably haven't done a deal already or have invested in a deal before. So it's like they be afraid to feel inauthentic or feel like an imposter. So right. I think that and because of, if you look at majority of, it's like apartment gurus, right? Majority of these, if you go to these events, they may have 1,000 people in the room, right? Let's do, for my purposes, let's say 100. Out of that 100 people, how many people think you actually do their first deal or do a deal? Like you see all the time, it may have a panel where it's like, there's people who did a deal last time, maybe 50 or 40 or 40, 20, but however, most of those are groups of people. But so the question is, what happened to the other 900 people? They already believe multifamily is a good idea. They already believe that that isn't investing, but they want to do it. But what happened to those individuals? So I think that's where as capital raisers, we need to we can understand, like, those individuals who want to invest in real estate, but just give them a way to do so. And I think that the crowdfunding is another route that can do it, because of now you can invest smaller increments of like either I can buy a course or invest in somebody else's deal. right? Had a mentality because now it opens up it opens, and also like I said before, do I trust you enough to give you $20,000 or $40,000? But do I trust you enough to give you $5,000 or $3,000 on the deal itself? So even to like it really opened my eyes when the big company like Fundrise, one of the top Fortune 500 companies, 55,000 companies, they had an article a while back, and they was able to buy 146 houses in Jacksonville, Florida, right? Fundrise, and the minimum investment was $10. I'm like this, like that was it was powerful. It was powerful because like it bought a whole. Jacksonville, Florida's not that big, so I mean, that part about half the whole city, 140 houses, and the minimum investment was $10,000. The thing what I get out of it is that, let's say you invest $1,000 in a course or in a deal, right? The thing about it is let's say chances are in 3 months, you probably see a return on that course. But if you at home relaxing, you see a check in the mail for something you invested in 3 months ago, then 6 months, another check, then another check. It's like that is a passive income. It creates a mind blowing, because why now you believe it's possible. Now it's like this, wow, now I should do more of this. I should do more of this. So now it creates the ripple effect of like, it's truly possible to work, to get money from something you did a year ago and get money coming from passively. So I think that it creates this whole big wave of creating the belief that it's possible, because now you see it, even though it's a smaller amount, we'll add more fuel to it, we'll put more into it. And that's what I'm trying to create, that avenue for people, because now it creates more investors. So now you kind of think about, should I buy this big screen TV or should I invest over here? How can I start my money more wisely? And I think that it can create the economy of multifamily, or it's just in general, just doing entrepreneurs. I think that we are the ones who going to create where we want to be in, right? We are creators, entrepreneurs.
100%. Yeah. And dude, I mean, the empowerment factor here is that's the word that kept coming up for me, is like, the way that you're empowering people to get into this and earn really probably just about the same returns as anybody in a 506c deal would, or comparable, I would think. And, depending on the deal, of course, and the asset class and whatnot. But, and then from our perspective as sponsors, GPs, with our own investor base that we're constantly working on nurturing and growing, this gives us the ability to like open up our ecosystem to so many more people, and get the communications flowing, and the staying top of mind with them, and then getting referrals from them, and it just kind of goes from there. And those first of all, repeat investors are one of your very, very best sources of investors in general, of course. And then referrals are another great resource from previous or current investors. So, and this really gets at both of those. So there's so many brilliant aspects about this. And I guess, so it kind of begs the question, like, what are potential downsides, I guess, from say doing like in my position when I'm putting a deal together and putting a capital raise together, like I'm looking at maybe a 506c. We don't really look at 506bs at all anymore. But so either a 506c or something like this, what are the, pros and cons, I guess, of those two scenarios?
So it's funny to say that, because of, if you look at statistics, like if you look at majority of all the deals done for syndications, majority of it's like 93% of them is actually 506Bs. I mean, my buddies, me and my buddy can only know about it. And so I think of myself, if I was to be, you limit to 35 investors, not credit, right? So that means that you try to raise $1 million, everybody need to come up with $28,000. I'm not sure about you, but I can't find 28 of my friends to give me 35 of my family friends to give me $28,000 per year. I'm not sure about you, but my family friends won't give me that. But I could find 1,000 people to give me $1,000 on part of this deal here. So I think that's one to scale. But however, having more investors, we got software kind of help manage on the back end. Now one of the things about crowdfunding is a Reg CF. So as you understand the legal terms, there's really three main regulations. You have the Reg A,
Right.
The Reg D and the Reg CF. The Reg D have exemptions, and that's the 506C and the 506B.
Right.
That you can do that. So I mean, so the thing, so one of the downfalls of crowdfunding, once again, you are a public regulation, so you're on a public platform. So what it means is you gotta do a public audit. So you gotta do so instead of doing a PPM, private placement memorandum, you got to post it. So you got to do a Form C, and you got to do a background check because of a bad actor check, if you will, right? So because you're dealing with the public and so forth. Now,
and all that is like public knowledge, public record, right?
Correct. Yeah. Now, so and granted, it's transparency there, which is great because people like transparency.
For sure.
Now, so it's more work to be done, but however, you can get more done on a process. That's still the time frame. You can do all that in about same time frame again. If I was to see about 3 or 4 weeks, you can get all that done as well. Mm-hmm. The other downfall is that the portal have to be open for 21 days. Once again, 21 days. So we back that out. You start your closing and go 21 days. So that way that you closing, you have 21 days, a window to at least you have the minimum is 21 days window you have to have open, right?
Okay.
Once again, so maybe it's not an issue, but it's a good thing because you have more time to raise capital.
And I mean that should fit into a normal, say 90-day schedule.
Correct.
From contract to close, essentially.
Correct. And the thing about it is you can have the audit and background check before you even get a deal done. Mm-hmm. Right. So audit. So you can have a lot of that done before you even do it. And a good thing about it is you can do something called test the waters, where you can put it out there to see if you get any feedback before you actually commit to the crowdfunding portal, right? So you can test the waters to see it. The downfalls that a lot of people see is the amount you can raise. Currently this year, because they just raised it from 1 million to 5 million. Right now it's 5 million, the max you can raise per year. Now, so you can cut that up anyway. You can do 5 deals at 1 million. You can do it 1 deal for 5 million, but however, it gotta be 5 million per year. Right. However, if you want to raise more capital, you can have more than one offering. You can have a crowdfunding offering with a 506C as well. Right. So that means you can tell the public about it. The same thing before. When it comes to you, are you accredited or non-accredited? If you're accredited, put them to your 506C offering. If they're not accredited, put them to your Reg CF offering. Right. So you have accredited investors over here of 5 million, and you have unlimited amount of non-accredited investors out there as well. So that's one of the workarounds to get around the $5 million limit.
Yeah, that is interesting. I thought it was a $5 million limit per deal, so I was way off on that. But that it makes sense. So, are these tracked by entity? Like, typically, in other words, we create a new LLC for every deal we do. So how do they track, kind of keep that limit in check, if you will? So what it goes to the issuing party, the issuer of the party, the issuer, the person who has the raising capital. So I mean, like if you own 20% or more of the entity, then that's what it kind of go to it. If you want to do that each year, you can. Okay, so $5 million a year. Got it. Yeah.
Okay. 5 a year of the issuing party. My bad. It's all going. Yeah. So you said. So I thought you were going with. We said a new LLC. So I mean, so usually when it's a new LLC, it still require an audit, even though it's an empty company, even though there's no dollar involved. It's called an empty audit, so forth. Sometimes call it. So it still be a company will be audited, even though it's not a dollar in there. It's just saying that, hey, public is an empty. Here's the audit, even though it's an empty company.
Yeah. So just to drill down, maybe you don't know this at this point, but like, does that individual new entity that's specific to that investment vehicle, that asset, and then we go and do another one, does that reset that 5 million?
It depends on if it's the same issuer. So it goes to the issuer. Okay. Yeah. Okay. So every filing is different. Like example, we have Crowdfund My Deal, the company I created because I partnered with crowdfunding lawyers. So to create Crowdfund My Deal, so they handle the legal side. And from my understanding, it is according to the issuer. So according to how each deal done, some people have managing parties and so forth. So according to how you got your thing set up, then we'll go from there.
I see. Okay. So needs maybe a little deeper dive.
Yeah.
Depending on how you're setting things up. Got it. Understood.
Right. Yeah. So, so if any case I say, like, if you go to our website, Crowdfund My Deal, we have you get a free consultation as many you want to with our legal team. So that way you can ask, because everybody have the specific scenarios. It's not a blanket thing. So you go there, you get a free consultation, and they'll you set a call, and they'll talk to you many times you want to get you set up. Our legal team, they're actually attorneys.
Yeah. So Crowdfund My Deal, guys. Crowdfundmydeal.com. That's where you want to go and check this out for sure. That's the resource. So, all right. So what else do we need to know as far as, just kind of technicalities, mechanics, anything like that we should have on our radar? So
I think that one of the things that I see is because of one of the issues that people are saying, like, okay, Corneilous, yes, I get 1,000 investors, probably sound easier, but however, now I got to worry about management of those investors, right? Now I got to do my K1s and communication and so forth. So so we actually have the portal behind it. So when you sign up, so forth, we created the soft. So you won't have to need another software to manage everything. We manage everything behind the scenes to help you manage all your investors, help you manage the reporting, help manage all the communication behind it. So we integrate with a company called CrowdEngine, but you will see behind our software we kind of under, and that's our portal that even you can bring some of your 506. Like we can do both of them, your crowdfunding and also your Reg Ds as well. So you got a 506 offering, you can manage everything in one spot to make everything kind of be more seamless. So that way you can focus on doing what you do best, and we help you on the back end.
That's great. Good to know. Awesome. Well, so when you look at vetting the sponsor teams, and then also, of course, vetting at deal level, at the deal level, how do you guys handle that? What's your underwriting process on all of the above?
So the main thing what we look at is for before we kind of do our initial dive in, we kind of do, like, you got to do the background check because of that really approve everything. Now the background check is not it's not as if you can't have a criminal record. You can't have a criminal record. You can't have a criminal record. However, they're looking for fraud, money laundering. Yeah. They're looking for the federal government looking for have you kind of misled investors of any kind of way? If you have, explain. Was it a plea bargain? What happened in the case? Like we understand like things happen, but we're trying to figure out like how to make sure that our investors, because of are in a safe spot or in good hands, right?
Sure.
So that's the main thing we look for. Okay. Once they're approved, then we kind of do our initial our other background check to kind of figure out who you are, so forth. Because of not only that you put your deal on our platform, we actually bring investors to your platform because of we have a list as well. Example like my shows, so forth. Always kind of integrate of how can we promote you more, but we want to promote the best product for our. Because once again, we think that hey, real estate is a great vehicle. Real estate is it's a better asset. Do that. So we're promoting this more, and we want to help you promote your deal to get more investors as well.
Sure. Yeah, and these are like 506c offerings where you can promote them far and wide, and there's pretty much no restriction on them, right?
Right, correct. Yeah, so the only restriction we have is that they have to. Well, the restriction that we have is that that the investor cannot like there's a questionnaire that once you investor come in, the questionnaire will ask them how much their net worth is. Right, because they say they do not invest more than your like 10% of your net worth, right? So it means, but however, that's on their part. You promote them and they kind of self-validate themselves because of that way you have to follow up with everybody trying to figure out everybody's net worth.
Yeah, makes total sense. Yeah, so I guess big picture, like there's just tremendous upside here. I think it is an interesting conversation around scale, right? Like, how scalable is this? Because we do, we're in, I know you know this, and you've done these deals, Corneilous, where, $5 million is like part of an $8 million capital raise, so it'll be interesting, number one, I think, to look at it seems like the trend's leaning heavily towards opening up the limitations around this. Like it just went from 1 million to 5 million in a year. So, maybe that continues, but also, just getting at like that question around, what if it, because in the residential real estate world where you can only have 20 mortgages in your name, that's tracked by social security number. So I think it'll be interesting to know how scalable it is on that line. So, but other than that, it just seems like a complete win from, especially a marketing and, visibility, PR, branding, getting your message out, getting your thesis out, getting all, everything becoming top of mind with people. It seems incredibly valuable. Back real quick, I realized I want to circle back on one thing. What do you do in terms of deal vetting and deal underwriting?
So we look at like the track record, and also we kind of look at the market itself as well. We have our internal team. We won't dive heavily involved in too far heavily involved in a deal or underwriting and so forth, because we kind of take your word. We kind of look more of you, right? Because of you already have to own it. Because however we have no equity in the deal as well, but however we do our underwriting of the deal, but it's not too far of a yay or nay. It's of too far deep in the weeds about SFL underwriting, right? If we see something that's kind of bizarre, we may ask a question and so forth. But usually we kind of like feel pitch that and do an interview with you, figure out who you are, and look over the deal, so forth, and that's really kind of it.
Yeah, that makes sense.
Because of and you said earlier about scalability. I think that one of the things that helps scalability, because of as you marketing the property or you marketing your deal, you find people on the sidelines watching you, right? And watching you and seeing what you're doing. And that's another opportunity. It used to be about you need 7 touches before somebody actually say yes to you. Now those 7 touches can be an email. It can be a social media post they've seen. It can be the same post they've seen multiple times over and over again. It can be a conversation. So the fact that you have more stuff out there being promoted, it allows people to who's in the sideline to figure out, oh, you got another deal, so forth as well. And also you building your list up. So even if you let's say you do your first one, then next one you got another deal, you can do a 506B or 506C, because why you have that list of investors that will invest with you again. You build trust. So it allows you to grow your investor list faster. And like I said, now you have a list, you can create your own fund. You can do so many different things with that, because of now it builds. It's the foundation of kind of get you to a different level, right? How and then maybe the next you can do it again, so far. So right now, there's ways to do it, but that's the way I know right now.
Yeah. Okay. Got it. Awesome. And then I guess the other kind of obvious question is like, what's the cost of money look like to a sponsorship team? How does that work?
So it works. So there's 2 fees. There's one on the front end and one at closing, right? Our commission at closing. Now I say because there's 91 crowdfunding portals out there that's been approved for FINRA, and everybody have their own different fee on the back end. But however, on the front end, I'll tell you, ours is 3%. It's just like a real estate agent fee. It's 3% for the portal. It goes to the deal at closing, just like a loan fee, so forth. It goes to closing. But on the front end, it's about our fees is about $10,000 today, right around about $10, because of there's for one, I say today because of we're working on trying to get it down, or trying to get it one, because of one, it's an onboarding fee. It's about $3,000 for onboarding, right? Everybody onboarding. The second fee is a fee for the attorney, the Form C. We have like our team, we have that team can do it for $3,000. But other attorneys,
that's an incredible deal, by the way.
Correct, exactly. Like people, like they have different fees out there, $3,000. Yeah. And also the audit. Audits, CPAs can go from different amount. The ones we found so far, we're on our last deal, did around $3,000 as well, right? 35. So that's where the $10,000 kind of came from up front, right? So like example, so that's the front end to get started. Then on the back end, when you close, it's a $3,000, 3% fee that goes towards the deal of closing. But again, like example, so we're looking for
3% on the amount that you crowdfunded.
Correct.
Yep.
Yeah. So if it's 5 million, 150 will go towards the deal. Now, the great thing about that is, now I know it's kind of shunned upon, but we understand that people do it, right? As GPs, sometimes like, if you need to raise a 1 million and so forth, you get other people involved, other GPs to help you raise your $1 million, right?
Right.
So now, if you're able to bring 5 million, you can cut down a lot of those GPs yourself, right? Because list. So now you can have less chef in the kitchen, right?
Yeah,
so
more GP percentage for you.
Correct.
Yeah. And then so what about returns to the investors? Is it just like any other deal where you're projecting, you're doing, offering a preferred return and, an equity split, and that determines their takeaway? How does that work?
So, it's the same as, so the process is the same way as you did on 506B or 506C. We have you determine your minimum, you determine your returns, you return. That's all on you. We're only a portal to a point where me being the owner of the portal, I can't even put my own deal on there, right? Even to the point, point that I have my show where you put your deal, I'm not liable to say, oh, this is a great deal. I'm not allowed to. They frown upon me trying to steer investors to one deal or the other. I have to be a true neutral party because of we are a third party servicer, if you will.
Yeah, which is a little bit of an interesting position to be in, because you've got your marketing efforts going on too. So it's like. You're trying to drive traffic on the one hand. On the other hand, you got to be careful, I guess. Yeah,
but man, but it's saying like I got to treat all the deals on my platform the same.
Yeah.
Right.
I got it.
Yeah. So I'm like, even if you brought 2 deals in, I got to promote the same deals the same way.
Sure.
Or not show favoritism on one deal or the other.
Yeah, makes total sense. Well, what have I not asked that is important to know? Anything? Have we not touched on any important aspects of this?
I think one of the questions is I was like this. Why so great? Why have we done this before? Or why saying just new have been around so long? I think because the Dodd-Frank Act, syndication have been around that long. First of all, right? Syndication. Totally. And as an example, and before the amount was 1 million. 1 million is not really a lot of damage for all the work is done. So 5 million is still not a lot, but it's something because you can do smaller deals. You can it can be a great portion of an ad to raise. So I think that it also is still a working process, and because sometimes people have crowdfunding offerings, but the thing is you have to put it on the crowdfunding portal. And it took us 9 months to get a portal approved. So the only reason why I even went this route is because of I had a show and I had an audience of investors who trying to pitch a deal. So because of it just happened to kind of align to what I was doing. Because of when I had my show, now when we doing a show, when people pitching their deal on there, the problem that I kept having, we'll have an audience of 100 people on a Zoom call for math purposes.
I remember it. Yeah, it's really well attended. Yeah.
Sometimes we got up to 200 people, but however, the math is still the same. That means that half of those individuals was accredited investors, right? At most, right? So then half of those was like, dude, I'm a credit, but I'm only investing if I can get part of GP share in that deal. So I cut down a little more. So then the people who had the amount to put in $100,000, $50,000, may only get put in for 1 or 2 years. So you're probably speaking to a small position. Like you have 100 people, but it's probably about 5 people you're speaking to. And that was kind of daunting on my part because of deals were getting funded, but it wasn't getting funded the way I wanted to get funded. I wanted the ability to be able to create an environment where you can learn about investing, right? And joint investing, but also with real people, real deals with real money, right? Because that's what we all want to do. I think that we want to invest more, and play the game of investing. Y'all play the game of investing because you learn as you do it.
Right, 100%. Yep. Yeah. And I mean that show was awesome, man. I mean it was so. The value, I can see why it was so well attended, because the amount of learning that you get plus the networking was just off the hook. But you're right, it wasn't necessarily what you were, or it sounds like it wasn't necessarily what you were kind of going for in the way of bang for your buck and whatnot. And this really gets at that. So super, super exciting, man. So this is a relatively new platform. What are your plans? I mean, obviously doing this sort of thing, appearing on podcasts, talking about it, rolling it out that way. Any other rollout plans for it? Are you, and then for people like myself that may want to look at this opportunity, what are the next steps as far as that goes?
So there's two really. So as you said, it's part 3. One, doing more podcast like this, getting the word out on people's platform. The other thing is we have a free challenge going on, a free Friday challenge in our group called Crowdfund Your First Million. We kind of walk through steps about building, basically teaching how to market, basically how getting you more investors on your list, so forth. Crowdfund Your First Million. Then that's where it's kind of going to integrate with the show called Crowdfund Your Deal Live. Mm-hmm. So that way you can see people pitch their deals in front of a crowd, so forth, and I can get involved. Then our portal. So the three main ways is podcasts or outreach, right? Yep. Doing our challenge, crowdfundyourfirstmillion.com. Then also doing our live show, crowdfund your first million, crowdfund your deal live, right?
Yep.
.com. So like the shows come back, but the shows come back better than before.
So crowdfund my first million.
Yep. .com.
First million. Yeah.
.com.
Yeah. Okay. That's one I hadn't checked out yet. I had already, checked out your other ones. So, okay, cool. So listeners, find those sites and check them out. I mean, look, we all should be limited partners in deals, and I'm preaching to myself here as much as anything, because we do a lot of deals and we're always general partners, and that's great. However, like Corneilous said early in the show, circling way back around, like ultimately we all want to be making passive returns on equity, right? And being a limited partner is hands down the best way of doing that. This gives all of us the vehicle to invest at any level we feel comfortable in, different deals that we feel comfortable in. So you're not just investing in a fund, you're investing in something specific that you can, go check out or touch or investigate or, whatever. And like it's an incredible opportunity on that side of things, right? To be a limited partner in other people's deals. And by the way, I think that's 100% one of the best ways to start off in this business if you want to be an active investor. We've talked about that on past episodes, but being a limited partner on a deal so that you get a front row seat to a deal, it would be like one that you would eventually do as an active partner, or GP. That's a great way of getting started. So. And then you look at the opportunity to be on the other side, where you're the one raising the capital through this vehicle. Both I think are very exciting propositions. So, Corneilous, man, anything else that you can think of?
Yeah, I think you made a good point, because of one of the things you said earlier about asset management, earlier in the show about asset management.
Yeah.
And right then you said that one of the best ways to get started is to be an LP. And I think that a lot of people don't talk about asset management because they don't understand how to be asset management. Yeah. But also also by being an LP, you understand how it looks from the other side. So as you experience, like, dang man, this guy don't talk to investors very often. I wish this guy sent me an update. I wish this guy sent me this guy or girl, this team sent me a breakdown. And so now when you do your own deal or on the GP side, you understand how it looks from the other side. Like, this is things that I need to inform investors, like, because I know somebody out there is worrying about their money or worrying about that we're not communicating. Even sometimes, like, just an email of no news is sometimes no news is great news, right? Just the fact they send a monthly email. I say email, even though I don't check it, but the fact that I know that it's still live out there. Yeah. I mean, so I think you made a good point. The part about being an LP, you get a chance to experience yourself, because one thing that people can't take from you is your experience. Like, dude, I know it for myself. I know because why I did it myself. And that's the thing that I think that when people try to go to the other side or go to the GP side, they may say, wow, man, I like it better on just being an LP, because this over here, this is actually work. This is active income. And, so 100%. I think that I think that you made a good point by saying that. I think that you're doing a great thing by actually just sharing your word and sharing your experience, so forth. Because of that's how we shine a light, by sharing what we have done.
For sure. Well, and right back at you, man. And thank you for being the connector that you are, and for being the creator that you are. Like you said earlier in the show, we are all creators as entrepreneurs. Everybody listening to this is in that category. And thanks, for putting this awesome platform together, crowdfunding, and being out there talking about why it's a great thing for everybody to be looking at and engaging in. So awesome. So you're active on which are your favorite social medias to
right now it's gonna be so today is Facebook, but but the show will probably be on YouTube more.
Okay. Yeah.
So right now we're doing a lot of Facebook. We're doing a lot of Facebook groups so forth. But however, our show gonna take a lot of energy on the YouTube side.
Yeah. Did you have a name for your YouTube channel yet?
It's gonna be Crowdfund My Deal. Our goal is to brand that big enough, and maybe I can sell it to somebody one day so they can have.
There you go. Yeah, I like that. I like that idea a lot. Yeah, and so guys, looking for Corneilous on social media. His name is spelled a little different than you might have seen a similar name, but it's Corneilous.
Yep.
And Cannon is with 2 N's in the middle. So I got that right, didn't I?
Yep. I would say spell it different because I am a little different.
Yeah. You told me that, I think, the first time we ever met, man. So and I can vouch for that. But you're different in all the good ways.
Thank you. Thank you, man.
All the good ways. So thanks a ton, man. And listeners, reach out to Corneilous and crowdfundmydeal.com. Learn all you can about that, and stay tuned on YouTube. So thanks, Corneilous. Thanks, listeners. We'll be back with another episode of The Apartment Gurus in a few days. Take care, everybody.
Take care. Thank you.
This has been The Apartment Gurus with Tate Siemer. If you enjoyed this episode, be sure to subscribe and leave a rating and review on your favorite podcast platform. To contact Tate, go to www.investwithgreenlight.com for access to his investor portal and Calendly link. He loves to hear from you and thanks you for being a valued listener. Just a reminder that you are the guru. See you on the next episode of The Apartment Gurus.